Good morning, everybody. Today is the 10th day in the month of January 2021. My name is Heritage Adisa, market analyst at HotForex. And quickly, we'll check through the markets, see what the overall sentiment is, see the opportunities, and then how we can take advantage of it. But please always remember that this is just a communication material, and nothing in this communication should be considered as investment advice or investment recommendation. Users acknowledge that investment in FX and CFD products is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which users are solely responsible and liable. Now, what we have this morning, in terms of the overall market environment is a more tilt towards positive or positivity, a more light risk on, a more gently positive market environment. I had this written earlier in there that market starts the week on the front foot, although moves are still very much marginal, right? I'm looking across board, we have equities pushing higher. Oil, yes, just ticks higher, although nothing too much to hold on to, but I'm keeping solid as well. Even in FX, talk about that now in a bit. High beta currencies are doing better. Some currencies are weaker on the day. But for now, across markets, focus still remains on the dollar, and most especially because of expectations for faster Federal Reserve rate hikes. Right, markets have been pricing in rate hikes fast as possible. We had reports earlier in the day as well with Goldman Sachs also saying they're expecting up to four, rate hikes, right, in this year, starting from the month of March. Now, all of this bodes well for the US dollar, right? It's not necessarily good for equities because when you raise rates, more or less tighten markets, right? That's not good for companies, obviously. So there's that to also watch out for. But for now, equities are just gently supported compared to how we closed on Friday, because on Friday we had, the job numbers was the headline prints for new jobs added. That's NFP was bad across board, but way below expectations. But we had unemployment rate also lower. We had wages also increasing as well. So there's that also put in the back of our mind. On the balance of things, it wasn't still that bad a print. With higher wages, obviously with sky high inflation as well. Although we're expecting inflation print, I think on Wednesday this week, also expected to be hot as well. With all of this in play, that still pushes the idea or still plays into um, reasons for Federal Reserve to hike even faster. So there's that also at the back of mind while we head on in the session. For now, equities are pushing higher, right? Gently supported to start the day. Although with the losses we had from the hawkish Federal Reserve meeting minutes, right? A couple of sessions back, right? That's still very much in play, but gently in this session, pushing higher. US already is above 47. It's still below 4,700 just right now. For oil, it's keeping above $78 per barrel right now. The VIX is lower, obviously saying fear is lower in the markets. Bonds are also pressured with yields also pushing higher on the day. In the FX space, the Aussie leads the pack. Now, with the Aussie leading the pack, yes, it's in line with the positive market environment, risk market environment. But even with that, there's been cases or um, there's been reports of rising virus cases in Australia, which could obviously hamper growth, could obviously hamper or even slow down a tighter, RBA, slow down reasons for tighter monetary policies from the RBA. So there's that to watch out for. But apart from that, the dollar is also strong. Obviously, stronger rate high calls keeping the dollar supported. NZ is also supported on the day. On the other hand, we have CHF pressured, we have the euro pressured, and we have JPY pressured, all in line, with the risk environment that we have currently. Now let's just look across board and see what we're talking about and see if the opportunities and then how we can take advantage of it. Starting with the equity side, right? We talked about this level earlier. A couple of let's just see. All right. Now, a couple of sessions back, we talked about this region. This first of all, this 4,500. We kept above it. We pushed lower to test it twice, and then we've pushed higher. So overly, first of all, equities are still very much supported, right? There's no doubt about that. But in recent time, because we're trading at the highs as well, you also want to be very, very watchful, especially now, with Federal Reserve, faster rate hikes for Federal Reserve also pushing higher, increasing. We need to also be very careful with this one. Currently as well, we pulled back back below this overhead resistance, that we had. Let me see, I can remember. Sorry, this overhead resistance that we had over a couple of sessions now. All right. over a couple of sessions now that we had, overhead resistance that we had, we pushed back below it, retested it to the downside, and now we are still pushing lower from there. So there's that also watch out for. In as much as we started the day positive as well, there hasn't really been any new tangible, flush of information I want to watch on to. And now you can see in today's session as well, we are almost back at flat levels, almost back at open levels, and now we are pushing lower even from where we started. I can't see this as a major I don't have strong convictions with the upside we're seeing currently. I mean, it's still very, very, very marginal. And look at it compared to the moves we had on Friday, on Thursday. I mean, we're still well within a range more or less, and then we're still way below 4,700, which is also a key support resistance level that we've seen over time for now. So there's that to watch out for. On the VIX side, yes, we're keeping pressured. Overall in today's session, we bounced towards this 20 level, which is also a very key barometer. And now you can see just a couple of minutes back, we've bounced back off it. Now, this is not good for equities. With yield with the VIX pushing higher, obviously that's bad for equities. So there's that to watch out for. Despite the strongest start we had in the day, I think we're starting to moderate out. And with this, I'm not looking to jump in on anything, low quality right now. I think the week is just starting. There's still so much, to latch onto. And then I think we can still hold on this for the time being. Look at oil prices, for example. We're still not doing much just yet. Yes, we pushed higher over the last couple of sessions, but in recent time, I mean, there's really not much to hold on to. We're still in the middle, with virus cases, restrictions, supply, constraints thereabout. And then we still even have OPEC to deal with. All of that is still very much keeping us very, very numb when it comes to oil for the time being. Now, crossing over to the FX space, like I talked about earlier, with the USD, yes, the stronger calls for rate hikes or faster rate hikes for the Federal Reserve is good for the dollar. But in recent time, we've seen the dollar also being capped. You can see, for example, USD JPY. Yes, USD is strong on the day. Yep, slightly supported, JPY slightly weak and pressured. But you can see this overhead, resistance trend line, right? Still holding the pair. Yeah, in as much as I like for the upside on this, and then we are still above this overall, support level around 115.5, right? I would like to see us clear out this overall trend line. I mean, if we can clear this out to the upside, we test this, I will prefer that, pushing higher. Alternatively, maybe a pushback towards this level, around, let's see, this level around 115.6. I mean, if you look, it was also level of support go back a couple of sessions, right, middle of last week thereabout. So I mean, if we could get this as well, I could also be interested, but I would really like to see us clear this out before looking to jump on this. For Euro USD, yes, dollar strength is interesting. I want to buy that, but for now we're still trading within a range. I mean, this even bottom support trend line also has kept and held, right back from November, a couple of weeks back. So in as much as I like dollar strength, I mean, the divergence between the ECB and the Federal Reserve is still solid and still there. Although we had reports earlier today that one of the ECB members is also calling for reasons for the ECB to start to talk about tightening sooner, especially with inflation becoming a problem. But even with all of that, I mean, there's still ways and miles apart. So I like dollar strength, but even with this, I'm not still looking to jump into this just yet. You can see the moving averages are even still intertwining and sitting right within the range. That tells you more of indecision going on in that particular space. One more I want to show before we also head out. For AUD JPY, AUD was leading the FX majors a couple of minutes back, and now we are seeing this push lower. That just goes to tell you how much care we should, or how careful we should be right now, especially now starting the week, right? There's not much holding on here. Yes, we could look at this as coming back to retest. There's a round number around here. Major one around 83.00. Interesting, over the last couple of sessions. But even with that, conviction-wise, still a little bit slow on that particular one. Euro AUD also an interesting one in terms of strength and weakness. Euro being pressured, AUD being strong as well. But if you look at this, despite the fact there's also a key, we're trading at the key interesting level. Going back a couple of sessions now, right? Let's just say I'll go back a couple of sessions way back as November, 2021, right? Tested again late November, a couple of times in December, resistance, even up to January, right? Right now, we are still struggling around this level. If I was going to pick out something, I'll prefer downside on this in line with the current environment. But, conviction-wise, it's still really, really slow, especially that we now even have a very, very, very light economic calendar, even in the day ahead. All we have in the calendar today is mostly just European unemployment rate. And even that, we're not expecting too much from this particular one so far. So right now, yes, light risk on, but really, really moderated right now. There's so much to still worry about. Markets are still getting started for the week. I think the major focus will remain on the dollar, remain on risk sentiment generally, the dollar as well as yield, especially with rate high calls, coming in faster and faster. So for now, I think I'm taking a more prudent approach, being more patient, waiting for a better opportunity while we go. But we're going to leave that at now. Thank you very much. If you have any questions, please do not hesitate to ask, and would always, like always, do our best to help. Thank you. Do enjoy the rest of the trading session. Goodbye for now.